This is Randy Finney with Right Side of the Chart, and today is really Friday, April 20th, 2018. Obviously, yesterday I was in wishful thinking mode, thinking it was Friday all along. Long story, a couple things that prompted me to think it was Friday. Either way, the analysis in that video still held true. Didn't matter whether we had a one day of overnight risk or two extra days for the weekend. The charts have played out with that bearish scenario. The futures did trade down last night. You can see here as we zoom in, they broke down below the ascending channel on the NASDAQ 100. Had a little move down, back tested, and then moved down to that first target that I was covering yesterday. That's at 67.08. So we've hit that target, and that pretty much eliminates, at least at this point in time, it's possible if we really move up, we can get that other divergent high if we get back in the channel. But at best, right now, I'm looking for maybe if we bounce here, which is my expectation. That was yesterday, a little squiggle along this area here. I covered NQ short when thankfully you guys pointed out that it wasn't a weekend. I went back in last night and was able to cover my NQ shorts right now, back to a full position and reverse that for a little bounce here. I think we'll get, and then ultimately most likely a jog back down here. Although I'm not banking on that right now. I'm going to play a little bounce trade here, see what happens. Maybe we want to come back up. There's that pretty decent resistance level there. Last night that was resistance. NQ failed several times there. And again, I'm going to get to QQQ in a second. And if you want to skip ahead, I'll cover in this order: NQ as I'm covering now, QQQ, then I'll cover the E-mini futures. That's the S&P 500 E-minis. I'll cover SPY. Then we'll touch on crude oil. I'll hit on USO, DWT, and then the energy ETFs. Bitcoin I want to touch on, and then gold, silver, and the US dollar in that order. So as always, if you guys want, just click on the bottom right, the settings button. You can play back, increase the playback speed is up to 2 times if you want. I usually play it at 1.25 or 1.5, helps get through the videos quicker. But these are the things I'm covering. I'm not going to go into individual stocks right now. I just want to cover the sectors that I'm focusing on and trading at this point in time where I see the opportunities. Um, Gold, not so much, but I know you guys have a lot of interest. I get a lot of feedback on that, or comments and requests for updates, so I'll cover it for you. All right, so there it is. Again, we're at support. If that support happens to break and things get ugly, you can see, like I said, next target's down here. We have a minor support below there around on the NQ 6693 where my crosshairs are. But if we, really blast through there impulsively, we head lower. But I'm favoring a little bounce here, like I said, and then we'll see where that goes. Okay, and this is QQQ. The reason I focus on the futures is they'll trade around the clock, give you a heads up for what's going to happen the next day. So we had the breakdown last night in the futures, which translated into this big opening. You can see right here, if you look really closely, see the dotted lines right there. That's where we closed yesterday, and then this is today's big red candle. So we gapped, or I'm sorry, not, well, yes, we did gap down. Excuse me, we gapped down right to or below support, intersecting support levels. That's what I love to see in trading, for sell signals. Um, when you have not one but two levels, and what I'm referring to, of course, is the uptrend line there, well-defined uptrend line, as well as this horizontal price support around 160, 454, and you can see that that was defined by all these lows right here and all these candlesticks. So this is technical analysis, excuse me, works great in volatile markets, and that's like I said, there's that gap fill I was looking for, and that's another reason that I'm favoring a bounce here, and it could turn into more than just a minor bounce. Here we are. We've now hit the oversold levels. I talked about that before. Typically you want to go, especially if the uptrend has, although the trend line has been violated, we're still in a near-term uptrend, because remember, an uptrend is simply prices making a series of higher highs and higher lows. So by that metric, we're still in an uptrend. And so when you're oversold, at least on this 15-minute time frame, That's usually good for a bounce. Trend indicators are starting to flip bearish, but again, that's a 30-minute chart. You go out to the 60-minute chart, and we're not yet oversold. You get oversold on the 60-minute chart, it's an even better buy signal, as you can see back here. We go back here to early March. We had a couple of oversold readings here, but that was actually a divergent low as well. So like I said, sometimes you get the one and done oversold. Sometimes you get a series of oversold readings that are each one's higher, and that's positive divergence with prices falling while the indicators make higher lows. So that's it on the 60-minute chart. And again, the trend's still bullish. This is really my go-to preferred swing time frame, and there it is again, that big gap that I was looking for a potential backfill. And then if we do break below there, again, this is very significant level. And that was all covered in last night's video as well as the last few videos. So there's QQQ. So near term bounce. Let's see what happens. Maybe we bounce all the way back to 164.54. Um, Really hard to say now. We can get a little heads up by looking at the 5-minute charts. There's the gap. I haven't updated this. There it is right there. Actually, no, there's the gap. You can see right there. There's the opening. That's where we closed that day on the 16th and then gapped up. So the gap has been backfilled. And 5-minute charts, nothing screaming out to me as a buy. So, like I said, maybe a little reaction here. And if we punch through there, a lot of times the market will do that. The gaps are so obvious to everyone. So the powers that be, the market makers, the algo trading programs, they're looking at a ton of stops placed right under there. They're looking at a lot of longs to step in and buy. So they may run it down real quickly, clear those stops before they reverse it up. That wouldn't surprise me at all. In fact, I almost expect. Okay, moving on. This is the the S&P 500 E-mini futures 60-minute chart as well, which we were looking at on the NQs or NASDAQ futures a minute ago. There it is. You can see pretty well-defined trend line, breakdown, back test, negative divergence at the highs. This is just textbook. These are the kind of setups I love to trade. And you can see we are also at support right now. I have support around 26.7350. No, that line's actually a push down. The blue is at 26.7263. So we pretty much kissed that line right now, trading a hair above it. The red is where we're trading right now. And, divergent high, everything else, support there. So yada, yada, yada. That's where I'm looking at most likely a bounce here. Keep this if this market has taught us anything, or what I've learned over the years is expect the unexpected. Anything can happen. If we drop down below this level, if we overshoot it, I still see, I think the downside from here is minimal and I favor a bounce, but I should add there's another support level here. I just added for you about 26.63. I see some reactions quite a bit there. So there's the futures, and if you want to look at SPY, let's go to let's look at a 30-minute chart of SPY for you SPY traders. And what I have is alternate trend lines that you can draw. This is the one I just had right here. I should have cleaned that up. That was the one on it's comparable on the ES. And then I have this other trend line that may come in because we had a reaction low here. Now this trend line also comes in at that support. You see, not by coincidence either. These support levels are about at the same level. So roughly 266.87, give or take. You can see a lot of reactions here to the left that define that that was capping all the advances in the SPY for recent weeks, barring this one little whipsaw signal there, and then we finally broke out. And so now we're back testing that level. So again, this is my what I favor right now is by the time you read this video or listen to this video, I'm sorry, if it plays out, we'll probably start reversing. And if I'm wrong, then you can see my next targets are down there. Okay, next up, let's talk about crude. This is a 60-minute chart of CL crude futures. Again, my preferred, trading proxy, and as well as I like to watch this because it'll trade around the clock. You can see that we had, I probably could draw it out here, another divergent high. We had a divergent high back here, as you can see, noted right here, and that definitely played out for a correction. You can see the correction right there. And now we have an even larger divergent high as I draw it out here. right there, about equal highs on the RSI roughly, and you can see lower highs on the PPO. So there's negative divergence, and so far this is starting to play out for correction. And I'll get to the charts, the ETFs in a second, or the ETNs that track crude oil. Like I said, they've been thrown out there quite a bit. I know I've gotten a lot of feedback. Quite a few have already started to take positions there, and so far so good. And I'll still most likely add that as official trade. Just need to pick which one I'll use as the proxy for the official trade, and then I'll give you price targets, suggested stops, and all that good stuff. Okay, here's USO, one of the most commonly traded crude tracking ETNs out there. And this one you can see again, I've covered it quite a bit in the past. Pretty nice and clear. Negative divergence, big rising wedge. Let me just change the color here if I could on this line tool to this color here. It stands out a little better against the black background. There it is. Divergent high. Beautiful trend line. I mean, super well defined to watch. And so again, I continue to maintain. I think there might be a very nice, not just quick pullback trade, but a trend trade coming, especially if you short high, within the wedge and hold out for a breakdown of the wedge. I think we're going a lot lower there. And as you can see most recently here, we have some potential topping sticks. Looks pretty bearish. Nice reversal so far. We've still, there's still some work to be done to firm up the bearish case, and we can't say with certainty that that's not just a pullback within a larger uptrend. But if I look at again, this is what's guiding me here. You can see these divergences; they continue to build. We have, strong negative divergence on the PPO and the RSI. I already made the case on that 60-minute chart of CL. And then those of you, I know a lot of you guys like to use the leveraged ETFs. Just remember, if these work best if you get a pretty fairly unidirectional move. In other words, if you get caught in a sideways trading range and chops around for a while, that's where the decay happens. I talk about in the FAQ page on the site. You can access that on the top menu, go under the ETF subsection, and talk about how that decay works. But it can also, the leverage can actually work in your favor. This is a DWT is a 3-time inverse crude ETN, meaning it's 300% short crude oil. And if you get a pretty sharp correction in crude, you will actually have better than 3 times the drop in crude. Again, that's how the math works. It's all explained in there. I don't want to get too much into this in this video, but that's what I'm looking at. I think it looks good, and this may be added anytime. As you can see there, same thing. This is just looking at USO in reverse. There's bullish divergences here because this is an inverse ETN. So maybe a move up here, a little reaction one more time, tagging that trend line. And then you can see these are my targets. I think I've already shared these with you. These are my what I would call they're minimum targets. I think each one you probably have a reaction. They're significant levels. And if things get really ugly, we might go all the way up here to about the $22 level in DWT. But as of now, let's just say I'm favoring a move up to the $15 level. And it's only trading at 868 now. So I know some of you got in it recently, even yesterday. I got a couple private messages and other people saying they're in it. If it gets up to $15, without a lot of chop and grind, so there's not a lot of decay, that's a 73% rally. But again, that's leverage. So look at it this way. If you're taking a 3-time leverage ETF, you really should reduce your position size by about a third. So it's 6 to 1, half dozen to the other. Do what you want, but be careful with the leverage. That's one way to quick losses if the trade moves against you and you're not disciplined with your stops. Okay, and as I mentioned yesterday or recently, you know, down with crude will go the energy stocks. It's just like gold, Gold goes up or down, the gold mining stocks are going to follow. Same thing with the energy stocks. So they had this super sharp ramp, overbought, very steep, near vertical ascent. So and right into resistance too. I pointed that out yesterday, and you can see so far pulling back, pretty decent. Nothing huge, but a 1% pullback. And that looks pretty ugly too, as far as these candles go. So if we continue to move lower, there's a little gap to be backfilled there, which it's almost been backfilled now. If we go much lower, you can see a potential. The PPO hasn't rolled over yet or crossed over, but it's starting to turn down. So you can't rule out one more thrust up in these energy stocks. You can't rule anything out. I mean, this could turn out to be flagging action. If crude can burn through those divergences, maybe we flag here and then run all the way up here to this target here, 78.47. But again, guys, that's what stops are for. So if you short XLE, you can put a stop not too far above these recent highs and minimize your losses just in case it does prove to be a little correction or bull flag continuation pattern there. XOP, same story, down about 1%. Not much else to be said on that. And then XES. These are the three big non-leveraged ETFs. And XES, as I pointed out, has really, the most well-defined resistance level here. Around 1676 is where I have a lot of reactions when I go back all the way into early May of 2017. And we overshot it, which I said the other day was most likely a momentum fueled overshoot. You had this strong momentum heading up to that level, so it's more than common to see an quick overshoot, and so far that has been the case. So technically this is a failure at resistance or a failed breakout, any way you want to look at it. But respect that level. We regain it again, especially if we get over those highs. So same story with XOP that I just talked about, or XLE. If you want to short the energy stocks, set a stop not too far above the recent highs, and pullback target would probably be, they all have the top of this recent trading range right here, and that would be a pullback target to measure it out for you from where we're at right now. I'll have to turn off these lines so they don't move. It'd be a drop of about 5.25%, and of course you can use any of the 2 or 3 time leverage ETFs if you choose, and double or triple those returns. Next up, Bitcoin. I still like Bitcoin. I'm still long Bitcoin. Added to it today. We broke out of this trading range. So the story is, we had, again, if you haven't caught the analysis, we had a real nice downtrend line here. You can see that it really formed a bullish falling wedge pattern. You had nice divergence, bullish divergences confirming the bullish nature of the wedge, positive divergences. You had an impulsive breakout, which is what you want to see ideally on a breakout of a pattern like this. A very impulsive move that led up to this consolidation zone here. So Bitcoin, and again, these are Bitcoin futures. Let's get rid of that tool. Let's use a box tool to sort of show you that recent trading range. There it is. That's consolidation. And as of today, we've broken out. Now, not super impulsively, consider, I mean, it's up 3.15. Again, these are Bitcoin futures. But we are above the range. So, I think it's objective here. It's objective on a back test. If we fall back within the range, then we're probably going to continue to grind around within that range. It could be a failed breakout. I would be remiss not to point out there's some potential divergences, but at this point in time, I'm not overly concerned with it because I think there's probably more upside to come from this wedge. But again, I would be remiss not to point those out. So, even at this point, we have divergence. It's potential, not confirmed. That's just terminology I use because the PPO and the MACD, this is actually a MACD I have on here. PPO is down below. I should have put the RSI up on this chart, but those momentum indicators are still pointing higher. So if they reverse, if Bitcoin falls back within that channel, we'll have confirmed divergence, and that could send prices all the way back to the bottom of the channel, possibly even below. So, if you take this breakout, or add to a position, maybe a stop somewhere slightly back with allow it a little bit of room back within the wedge. I'm sorry, in the trading range, and then just minimize your give backs if this proves to be a false breakout. But right now, I still like it, and I think there's a good shot heading up here, and that's 90.82 is that target there up on Bitcoin futures. And for those of you that trade that don't trade futures, I've mentioned a couple options, but GBTC is more of a direct play on Bitcoin. It does trade at a premium or discount, but again, we had, I was pointing it out back here, and it moved up. It took out the downtrend line that we were looking at, came in, back tested it, also back tested that 1194 former resistance level, which it took out as well. Now support. Remember, resistance once taken out becomes support. So this is another great example of technical analysis. These charts have not been modified. This thing has played out very nicely, and now it's already up close to my $15 target. and from there maybe a little reaction, and then on up to 2055, that area. And again, these are actual resistance levels, so best to set your, if you're targeting 15, set your sell limit order a little bit below that. I haven't made that an official trade, just been covering a lot lately, and I know a lot of you guys are in that, or the proxies. The other proxies that I've covered in the past and recently is are overstock.com, um, with that whole blockchain technology thing that they're getting into, and ICOs. So far, that was a level I mentioned here. Is support 3094, and so far it's bounced about 30, 33, 34% off that level. And you can see it has a resistance zone here. If Bitcoin continues to rally, again, because this is a proxy for it, it's not a direct play on Bitcoin, but it will move with Bitcoin. The correction came when the correction in Bitcoin came, the rally came with the rally in Bitcoin. So you can see next target here, if we can punch on through this resistance zone, that recent high around 41.90, 48.18. And from where we're at right now, give or take, if I grab that, we're at about another 28, 29% or so. So not bad. And let's see if I can add a downtrend line in here as well, which looks like we can. Yes, there is a pretty nice downtrend line to watch. So as I say, if I can have two intersecting resistance or support levels, all the better. So that is where I'll be closing out my position if and when we get there. And if Bitcoin continues to go, I'd expect a reaction. I'd probably recycle back in and then maybe look for a breakout above the trend line and/or 48.18 for a longer term buy signal. But as of now, that's all I'm looking for. But we'll see. Charts are dynamic, and so is my analysis. So we'll see what happens. And then the other one is Riot. Riot blockchain continues to flirt. It's 637 is a decent support level. You can see it goes back here to the November lows. We've flirted with that level, 637-ish. It's gone a little bit below there, down to maybe 623 or so. But you had this downtrend line. You had a breakout and a back test so far. So this one, looks objective here. And again, it's all going to hinge on what Bitcoin does. So keep an eye on Bitcoin, of course. But if Bitcoin does rally, this one is you're buying it right now, very close to support. You can do that with a stop below, and it's a very speculative position, very aggressive. I cannot emphasize that enough. This one, so keep your position size commensurate with your risk tolerance. In other words, if you normally trade $10,000 of SPY or QQQ, don't put more than a couple, few, two, $3,000 into this one, because the returns are oversized and so are the losses. You can't run a tight stop on this thing. The daily price swings are normally, today it's mostly flat, but this thing can move a lot. And my target up there, if it's hit, let me give you a first target. I should update this. Now we have that reaction high right here. So 837. So where we're at right now, or if you can grab it here at 637 or somewhere close to there, you're talking about 30% to the 837 level, and then about almost 50% to 960. So if you're targeting 960, which I think this thing can and will hit if Bitcoin, the bullish scenario plays out, a 50% upside, you can allow yourself for a 10% stop loss. That's still a 5-to-1 risk reward ratio, which is an excellent risk reward ratio. So if you're not comfortable with a 10% stop, you might say, well, Randy, I only give myself 2-3% stops. Fine. Do what I said. Take it down to $3,000 instead of $10,000, and a 10% loss on $3,000 is still, comparable to a 3% loss on 10,000. It's all math. You're going to lose the same amount, $300, either way. So that's what I call beta adjusting position size. That's how you trade these volatile, more aggressive names if it meshes with your trading style and risk tolerance. Okay, and finally to wrap this video up, currencies, we do have some developments today. I've told you I've stood aside the gold trade for a while now. I do not like to engage any trade that is in a sideways trading range, or I think will remain in one. It's frustrating to get chopped around. So the dollar, this is a euro US dollar pair, which euro is the largest component of the dollar. So I use this as a proxy. We do have a breakdown here in the euro US dollar, but remember, it's the largest component. I think it's like a 57.6% weighting if memory serves me correct. But it's not the only component. So I'll cover the dollar index here in a second. We flirted with this trend line. We've been flirting with it for a while. This is a pretty impulsive move down today. And remember, euro down, which is what we're seeing today, equals dollar up because this is the euro versus the dollar. So this is the dollar rallying, which is bearish for gold. And we'll get to the charts of gold in a second. However, it's all, we do have some support. These two lines that I've showed you before, that's a pretty decent support line. We're at it now. There's another reaction, a couple reactions down there, and then we have very significant support right here, about 1.20943. So, one scenario here that I could see happening is we could go down, we either bounce here, maybe a little bit farther, and then come up and back test this wedge from below before finally moving lower, where the dollar really rallies and the euro falls. Let's look at the dollar index, and we'll get to gold and GDX and silver, and we'll wrap it up. Okay, here's the US dollar index. So this has not yet broken out. So the dollar index, of course, is when you take the dollar against all the other currencies in that basket that comprise the dollar index. Yen being the second, euro's the largest, yen's the second largest. Then you have the rest are in much smaller percentages after those two. So it's really the euro and yen that, for the most part, will drive the US dollar index. So this has not broken out yet. Remember, dollar up equals gold and other dollar sensitive commodities such as oil, typically they fall. So watch this chart, even if you don't trade currencies. I'm not a big currency trader, but I do chart them for the dollar sensitive commodities that I trade. And you can see this is sort of like, again, the story is the same. It's a sideways trading range. It's a grind. But if we break out at the top of that range, there's a little reaction there. Most importantly, this downtrend line, we do have a little bit of support right there, a little reaction there. But this is where I think we're headed once that trend line breaks. Now, again, it's a matter of do we have another thrust down? That would be bullish for gold, bullish, possibly bullish for oil. Sometimes you can have temporary disconnects if there's, strong supply demand dynamics with oil or with gold. They can move in tandem with the dollar instead of against it. That's possible. But either way, this is what I'm on watch for. And sooner or later, ultimately, I figure we'll break out. In fact, as I look at this chart right now, guys, here's what I see. Let me show you what I just noticed on the dollar index. I noticed these indicators setting up for nice divergent low, bullish divergence. This is the RSI. Here's the PPO, the MACD. So an ideal scenario would be another thrust down to a new low, take out these recent lows, and then a reversal going on to break out of that trend line and moving all the way up here to 92.42. So that would be a near-term bullish for gold in the metals, but we'll see. That's again one possible scenario, but my convictions aren't so strong because we're in this sideways trading range, this grind, and have been for a while. Okay, and ended here with the metals. Not much to say. I've been harping on this for a while. Here's that trading range in purple and gold. So if you're trading gold, you're just good luck. You're just going sideways. You're getting grounded. You're up today, down tomorrow. And this is the kind of trade I try to stay away from. Silver started to move recently, broke out of its trading range. We had this trading range right here, gapped up, and it hit this that I highlighted this level in advance, 1637. It's a well defined, it's a level I've had on this chart for a while, and that stopped the advance in silver so far. So it needs to take that out. And again, silver will only go so far without gold moving in the course in the US dollar and everything else. So those are just levels to watch. PPLT I've covered recently, platinum, that's another one that may move, but again, until the dollar index gives us a clear direction of where we're going, it's hard to say. My convictions just aren't strong. So I remain standing aside from that trade. And here's GDX. Gold miners are now at the top, of that resistance zone. 2315. That's the target I had before the top of the zone. We've traded in that area. We've traded above and below. Sometimes we break above. You can see all the lines here. So when you get above, but for a large part of the last couple of years, the miners have traded in this area here that we're boxed in right now. So you want to see a breakout above 2315, but I would not take that breakout aggressively long unless you can see some type of confirmation with gold and the US dollar confirming that breakout. Otherwise, it's likely to prove to be a fake out or a whipsaw signal. So that's it. I'll keep you posted if I see any interesting developments in the precious metals, crude oil. Those are the things I'm watching now. It's not all inclusive, but that's where my primary focus is. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.